Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. This morning what I'd like to talk about is what's going on in the equity markets, and then we'll look at a play in that market. Okay, the market is definitely in a confirmed uptrend now. If you recall last week, we showed some good leadership out of the small caps. They're led by the Russell 2000, the S&P 600. We saw microcap leadership looking at the IWC, the ETF for microcaps. However, one thing we did lack was volume. And the market was just melting up. But we did get that volume confirmation last week. Last Thursday, the NASDAQ rocketed up about 1.6%. The S&P went up about 1.5%. And both of these came in on higher volume. So this qualified as a follow-through day. If you recall, a follow-through day is when an index stages a reversal to the upside on big volume, greater than 1.4% in price after a bottoming day. So we had our bottoming day June 24th. So now we got some confirmation that this rally was for real. And we see a lot of groups participating in this rally, and that's also very bullish looking forward. We have the financial ETF, the XLF, at new highs. We have the consumer discretionary XLY, also at new highs. We have bank stocks doing very well, regional banks doing very well, and we see broad participation all around. A few weeks ago, you looked at the market breadth was very narrow, and that has drastically improved, meaning a lot of stocks have gone up above their 50-day moving average, have gone up above their 200-day moving average. So we have breadth, leadership, strength, volume. That tells us this market's pretty good to go. Now, if you also believe in the Dow Theory, the Dow's making new highs. The transports didn't quite do it. The Dow Theory tells us that we want to see the Dow Industrials and transports moving together. But however, they are moving in the same directions. The transports are just a little bit off their highs, so we'll wait to see if they can catch up. And also, one of the sectors that continues to do very well is the biotech sector. The big cap biotech stocks took a breather and they corrected over these last few weeks, while the small cap biotech stocks continued to lead. Now, last Thursday when we had that follow through, we saw some good action again out of the big cap biotech stocks, namely Biogen, Gilead, Regeneron, and Celgene. Now I'd like to talk about Celgene. That symbol is CELG. Celgene has about 8 quarters, or even probably if you go back a few years, where they're constantly growing in terms of their earnings, anywhere from about 25 to 35%. The revenues are always coming in anywhere from 17 to 15%. So they have very good earnings stability going forward. They have a lot of drugs in the pipeline, a lot of drugs that they're making money off of. Now Celgene pretty much doubled since last year, and in May they peaked at about 131.5, and they've recently been correcting over the last few weeks. They bottomed at about 110, and Thursday when we had the follow-through day on the indices, Celgene had a big gap up. Jumped up to about 131, and right now it's trading anywhere from 133 to 135. In my view, this is a viable gap up. You can buy it at these levels up to about 137, and if it fails, I'll use the 131 level as your stop. However, going forward, good things look good for Celgene going forward, so this may be a good play to try. But of course, as always, let price and volume be your guide. And this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great trading day.